I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're doing well. It's Lane here with MetaShackle. I was just sitting here looking at some of my charts, making some adjustments, and just thinking about things. A lot of times when you're looking at the charts, ideas will just kind of roll into your mind, and you'll see things about the charts that you normally wouldn't notice. You just have to take a little bit of time to kind of look at them and think about them in kind of a broader sense. And as I was doing that, looking over the ONDO charts, making some adjustments, I noticed something very interesting, and it really surprised me that I missed this before, because I was already aware that this was a factor in the chart, but I guess it just hadn't crossed my mind until I was looking at the charts to kind of think about this, and then I started to look at the overall perspective. But just looking here at the ONDO daily charts, you can see that down here in this area, we've started to break out of this upper trend line of this descending wedge pattern, which is extremely bullish. We do have a bearish fair value gap right here that it has already traded up into, as you can see in this general area. So this is going to be one of the challenges to getting higher. Now, if you look at the overall pattern as it sits breaking out right here after coming off of this low, I have it so that the false breakout leg is going up here right to this bearish fair value gap, not quite to the center of equilibrium, but right here to the lowest quadrant. And the flash crash occurring right here, which actually shows the drop right here taking out this previous low before the breakout begins starting in the month of May. Now what I'm going to do is I'm going to give you a broader perspective of this pattern. Now what you see here on the left side is the previous pattern. We broke out of this pattern, coming up, setting this high right here, and formed a new equilibrium zone. So this old equilibrium zone looks very similar to the one that we're currently trading in now. You can see that it had a liquidation candle right here that broke through the pattern, coming down to the red Fibonacci area in the -3, -3.5 range. Once it broke out, breaking out of the wedge, which is where we are on the current pattern, we made a move upwards here to the top of the Gaussian channel, breaking just above the -1 Fibonacci. If you look at where we're at now, we're very close to that same area. It then failed, coming down, back up again, and then dropping down right here, coming to nearly the bottom of these lows, but not quite taking out this previous low, and definitely did not take out the pattern low. But you can see that even after this breakout, it came down, consolidated a bit, then dropped down, sweeping this entire pattern, coming down and nearly taking out the previous low. So you can see how the pattern that we're currently in resembles the pattern that we just came out of, moving into the Trump pump on November 5th. We have this same low here. Our liquidation candle on this pattern didn't go near as low as this one did, but it's still there nonetheless. Forming this low here, this low, breaking out of the pattern here to the upper range of the Gaussian channel. The exact same thing that we're doing right now. Then price consolidated, coming down, sweeping the pattern here. And once it swept the pattern here, taking out all the sell side liquidity, nearly taking out the previous low, then we saw the breakout. Now look at these two patterns, especially, I'll make it even easier. Look how similar these patterns are to each other. Consolidation zone right here, heavy accumulation right through here, coming down to the bottom, sweeping this liquidity, and then bouncing up. So this is a good example of what I'm talking about, with the flash crash coming to get that last little bit of liquidity, because it's going to need it for the distribution on the way up. And that is very similar to what we're seeing right here. We might not go much higher than this, although I do think that we should at least come up to this range, even though it might not even be quite to the equilibrium zone itself, but more in this range here At the most, I would think, even maybe coming up to this white line, because if you look at this previous pattern, it came up to this Fibonacci, it acted as resistance twice, then it broke through that, but fell underneath again and struggled to get up above it until the breakout. And at that point, it even turned it, flipping it into a form of support. So we might see something similar here, because it also came off and retested this Fibonacci level right here, just like it did there, and nearly doing it twice right here before falling back. So this may be the area that makes it very tough to get through for ONDO until it takes this liquidity down here on the sell side, then breaks out just like it did right here. So this would almost make me think that this number, that these waves would be most accurate if they were placed right here, being so low from the top of this pattern. If we do get this flash crash heading into the end of April into early May, we very well could see this come down, take out this low right here, and possibly bounce off of this -5 line right here. So this is very interesting to look at, especially with the two patterns merging. And another interesting thing is if we take this equilibrium zone here and we pull it forward onto this chart, you can see how that equilibrium zone could carry through, and actually how it's playing into this chart as well. This equilibrium zone here is actually acting as resistance on this side of the chart as well. And I've never seen a situation to where a previous equilibrium zone pattern actually played back into the next one after creating another one. I've never seen this happen before, but it's definitely giving some extra information, and it's very interesting to look at and to think about, because this adds kind of a layer of complexity to my particular style in charting, and at the same time is making me realize that there may even be some things that are possible with this particular strategy that I haven't even considered up to this point. And it just makes sense, because in life overall, generally, we are all always learning. So I just wanted to show you guys this because I think it's very interesting, especially how this breaking out here, even if it does get stopped up in this area coming back for the retesting this upper trend line of this descending wedge pattern by coming up here, grounding here, would also take out the previous low, sweeping the remaining liquidity before the breakout. There's a lot of interesting things in play here, especially when you take into account the fact that we have an inverse head and shoulders. We're breaking out of the upper trend line of the wedge, heading into this area. The fact that retests of the trend lines is actually pretty common in this type of a pattern, as well as the pattern low sitting right here in that same area. It just seems to make sense that when this thing tops, it will flash crash down, retest this area, sweep the remaining liquidity of the pattern from this area here, then we'll see the true breakout, moving up to equilibrium, getting above, and then challenging this pattern high right here, most likely sometime in the month of May or in early June. This is an incredibly beautiful chart, and anyone out there that likes ONDO, this chart should make you really happy, because I see some really good things about to happen here for ONDO. Anybody that's buying at these levels or lower levels, I have a feeling they're going to be very, very happy. And of course, that's just my opinion and not financial advice. So thank you so much for watching this. I hope you've enjoyed it. Please do me a favor and hit the like button, as it doesn't cost you anything and it definitely helps the channel. Thank you so much. Have a great day.